All right, today we are tearing down a real technical puzzle. We're looking at a stock called PRPH, and honestly, the clues we're seeing are pointing in completely different directions. So let's get into it and see if we can solve this thing. So, what kicked this all off? This number right here. An almost 18% jump in a single day. You see a move like that, and you gotta ask, what in the world is going on here? And that brings us to the central mystery. You have a stock that's been beaten down, trading near its 52-week low, and then bam, it just explodes upward. So is this the turnaround everyone's been waiting for? Or is this just a trap for unsuspecting investors? Let's follow the clues. To figure this out, we've got to be detectives. And every good investigation starts by looking at the big picture. So our first clue is the stock's long-term trend. This will give us the context we need for that big price spike. Now, before we look at the data, let's talk about one of our main tools, the simple moving average, or SMA. Just think of it as a way to smooth out all the daily price noise to see the real underlying trend. The rule of thumb is pretty simple. If the price is trading below that average line, it's generally not a good sign. And whoa, look at this. It's not just below one or two moving averages. The current price is below all of them, from the super short-term 5-day all the way out to the 200-day. When you see a clean sweep like this, that's a really powerful and unified signal. So the takeaway from our first piece of evidence is, well, it's undeniable. The prevailing winds for this stock are blowing strongly downhill. It's in a confirmed severe downtrend, no matter which time frame you look at. Okay, but that doesn't explain that 18% jump, right? This is where our story gets a little tricky. Let's move on to our second clue and look at the short-term momentum. What forces are at play right now? And to get this next part, we need to understand a key concept: oversold. The best way to think about it is like stretching a rubber band. You pull it and pull it and pull it. Eventually, it's gotta snap back. In the market, a stock can get pushed down so hard for so long that it's just due for a corrective bounce. So our first momentum indicator, the MACD, pretty much agrees with everything we've seen so far. It's confirming that, yep, that downward, bearish momentum is still very much in control. No surprises there. But then we see this, a completely different indicator. The stochastic oscillator is flashing a totally different signal. It's deep in that oversold zone. It's basically screaming that the rubber band might be stretched to its limit, making a bounce, like that 18% jump we saw, entirely possible. And right here, we have our first major conflict in the evidence. So let's put it side by side. The MACD is saying the downtrend is strong and steady. At the same time, the stochastics is saying, hey, we might be due for a pop. This right here is the heart of our puzzle. And when your clues contradict each other like this, you have to find a tiebreaker. Which brings us to our third and really our deciding clue, the market's conviction. We're going to look at trading volume to see how much real power, how much belief is behind these price moves. Was that 18% jump a real change of heart, or was it just a bunch of noise? First thing to know, the analysis confirms volatility is high. That means the price is making big, choppy swings. And that's usually a sign that buyers and sellers are really battling it out and nobody's clearly in charge yet. But this next clue, this is critical. We're looking at the on-balance volume indicator, or OBV. Think of it as a money flow meter for the stock. And what it's showing is a steep, steep decline. This means that even on that big up day, more money was actually flowing out of the stock than was flowing in. And the analysis is crystal clear here. It says the declining OBV is, and I quote, confirming the dominant selling pressure. In other words, despite that one exciting day, the real money, the real conviction, is still on the side of the sellers. This is a huge piece of the puzzle. Okay, so we've looked at the long-term trend, we've wrestled with the conflicting momentum signals, and we've checked the market's conviction through volume. It's time. Let's put all the pieces together and reveal the final verdict from the technical report. And there you have it. After weighing all the evidence, the report gives PRPH a technical score of 11.71. On this scale, that's not just bearish, it's strong bearish. So even with that huge one-day gain that got our attention, the total weight of the evidence pulls the conclusion firmly into negative territory. And this really shows you the tough road ahead for the stock. Down below, you've got support at its 52-week low of 10 cents. But to prove this is a real turnaround, it has to break through a whole bunch of resistance levels, like the 20-day average around 15 cents, and then the 50-day all the way up near 28 cents. That is a very steep hill to climb. So let's just quickly summarize the final verdict. The big picture? It's bearish, thanks to that powerful long-term downtrend. Now, is the stock oversold? Yes. Could we see another short-term bounce like the one that started this whole thing? Absolutely. But, and this is the most important part, that bounce isn't being confirmed by volume. The money isn't backing it up. And because of that, the final conclusion is simple. Proceed with caution. Which brings us right back to our original question. Was that 18% jump a dead cat bounce, a classic trap, or was it the real bottom? Based on this deep dive, the analysis says the evidence for a true bottom just isn't there. Not yet. The biggest takeaway here? The smart move is to be patient and wait for more clues.